Welcome to the Economic Pulse. Today, we unpack the turbulent global trade landscape of 2025. It's a complex picture defined by major policy shifts and rising tariffs, brewing significant economic uncertainty. The main story? Increased tariffs, especially from the United States. Think broad duties on goods from numerous partners. U.S. tariffs on Chinese goods, for example, have surged by 125% cumulatively. By early April 2025, the average U.S. tariff rate hit 22.5%, a level unseen since 1909. China and others have retaliated, with China imposing an 84% hike on U.S. goods. Specific tariffs, like 25% on Canadian and Mexican goods, and on global steel and aluminum, are also in play. This trade war is a dominant, unsettling factor. So what's the fallout? A global growth slowdown is the consensus. The IMF and WTO warn of potentially significant GDP reductions, up to 0.7 percentage points shaved off global GDP in 2025. Global merchandise trade could even decline. Expect global growth to stay below 3% this year and next. Tariffs also mean inflationary pressures, as these import taxes often get passed to consumers. In the U.S., the price level could rise by 2.3%, translating to an average household loss of $3,800. National economies are feeling it. U.S. real GDP growth is forecast to be significantly lower. China's growth is impacted by retaliatory tariffs and a weaker global outlook, with forecasts revised down to around 4.4%. Europe faces weakened industrial production and potential job losses, particularly in its steel sector. Canada and Mexico, as close U.S. trading partners, face severe consequences. Developing countries struggle with higher import duties, limiting market access for key exports like agriculture and textiles, and discouraging industrialization. Businesses are responding by reassessing global supply chains. While we've seen some nearshoring, a broader diversification is now evident as companies try to mitigate these new risks and costs. However, this tariff escalation could make global trade less efficient. Sector-wise, manufacturing and automotive industries face higher production costs due to tariffs on materials like steel and aluminum. This means higher prices for consumers. An American-made car could cost up to $3,000 more. Agriculture and textiles remain highly protected, creating barriers for developing nations. All this policy change has injected massive uncertainty into global markets, affecting investor sentiment and business confidence. Economic policy uncertainty reached its highest since the pandemic in early 2025. Looking ahead, the outlook is very unclear. While much international trade is tariff-free due to agreements, the portion that isn't often faces steep duties. There's a strong call for international cooperation to create a more stable trade environment. But we're also seeing a rise in economic statecraft, where trade policy serves national security and strategic goals. In conclusion, 2025 is proving to be a challenging year for global trade. Slower growth, rising inflation, disrupted supply chains, and heightened market uncertainty are the defining features. The long-term picture will be shaped by how policies and global responses evolve. Thanks for tuning in.